Ghana's oil and gas story is entering a defining moment, one shaped by urgency, ambition, and a renewed determination to reclaim lost ground after nearly half of the country's crude oil output vanished in just 6 years. What began in 2010 as a national breakthrough, with the Jubilee field bursting onto the global petroleum scene, has evolved into one of the country's most challenging economic battles. Today, Ghana stands at a crossroads, confronted by the realities of declining production, but armed with a bold strategy and billions of dollars in fresh investment aimed at rewriting the trajectory of its energy future. Before we dive deeper into today's update, take a moment to like, share, and subscribe to the channel. Your support is key to helping us grow and reach more viewers like you. Don't forget to hit the notification bell so you never miss out on exciting updates. And as this new chapter unfolds, the stakes are higher than ever for government revenue, national development, and the energy security of millions of Ghanaians. The story behind the urgency begins with an uncomfortable truth. Ghana's oil production has fallen almost 50% since 2019. What was once a thriving output of 71.4 million barrels has now dwindled to an expected 36 million barrels by 2025. The decline is not sudden nor mysterious. It is the direct result of years of delayed investments, aging offshore wells that have reached maturity, and a slowdown in the discovery of new fields. As the offshore reservoirs lost pressure and productivity and exploration activities waned, Ghana gradually slipped into a downward spiral, even as global competitors pushed aggressively forward. The consequences have been sharp and painful. Petroleum revenues, once a stabilizing pillar of the national budget, have tumbled dramatically. In the first half of 2025 alone, crude output dropped by 26% year on year, slashing government receipts by more than half compared to the same period in 2024. For a country relying heavily on extractive revenues to fund development, infrastructure, and social programs, the implications are impossible to ignore. And it is this reality, laid out clearly in the joint KPMG and UNDP 2026 Budget Highlights Report, that has fueled a renewed wave of strategic investments designed to turn the tide. In the face of this decline, the government has taken what many analysts describe as an aggressive yet necessary step, securing $3.5 billion in new investment commitments from global oil operators. This massive capital injection signals a surprising but promising development. International confidence in Ghana's upstream petroleum sector is not dead, it is reawakening. Out of the total investment, $2 billion is being directed toward 20 new wells in the Jubilee and 10 fields, the very assets that put Ghana on the world oil map 15 years ago. Although these fields are maturing, new wells are expected to unlock remaining reserves and restore a portion of lost output. Another $1.5 billion has been allocated for the expansion of operations at the offshore Cape Three Points block, one of the most technically advanced and strategically important developments in the country's offshore acreage. This expansion is projected to open fresh production capacity and enhance operational efficiency, offering a much-needed boost at a time when every barrel counts. Yet the most intriguing part of Ghana's forward strategy lies not offshore but onshore, where, for the first time in the country's history, commercial drilling is set to begin in the Volta Basin. This project, spearheaded by the Ghana National Petroleum Corporation, is scheduled to start in October 2026, and if successful, could mark the birth of Ghana's first commercially viable onshore hydrocarbon province. The prospect has already begun attracting interest from global giants such as Shell, whose involvement would bring not only capital but world-class drilling technology and expertise. For Ghana, this exploration frontier represents something deeper than just potential oil reserves. It represents the possibility of diversification, independence from aging offshore wells, and the opening of a new chapter that could propel the country into a more resilient energy future. But the KPMG and UNDP report does not shy away from issuing caution. Investments alone cannot guarantee recovery unless Ghana strengthens the foundations of its petroleum governance. The report highlights the urgent need for macroeconomic stability, predictable regulations, and sustained fiscal discipline, all critical to retaining investor confidence. Investors operate on certainty, and Ghana must demonstrate that its regulatory environment is transparent, competitive, and efficient. The report also calls for reforms such as establishing an open licensing regime for awarding oil blocks, reforms that would not only attract new exploration companies, but create a competitive market that encourages innovation and better resource management. There's also a powerful reminder that Ghana must not lose sight of local content. As billions of dollars flow into new drilling activities, the country must ensure its citizens benefit through jobs, capacity building, engineering opportunities, and technology transfer. Ghana's oil wealth must not remain offshore or in the hands of expatriate specialists. It must be reflected in a skilled Ghanaian workforce and stronger national institutions capable of managing the industry sustainably. Environmental, social, and governance (ESG) standards also take center stage in the report's recommendations. At a time when global energy markets are shifting and climate responsibility is becoming unavoidable, Ghana must ensure that its petroleum sector aligns with international expectations. Investors today prefer jurisdictions that balance extraction with environmental sustainability, carbon reduction commitments, community protection, and strong governance structures. Aligning Ghana's petroleum projects with ESG principles will not only foster global credibility, but ensure that the country can continue to access international financing without jeopardizing its environmental obligations. Still, the largest question remains, will this $3.5 billion investment package be enough to reverse the decline and restore Ghana's position in the global petroleum landscape? Many analysts believe the answer depends on timing, coordination, and execution. The investments come at a critical moment when competition for global capital in the oil sector is intense. Countries with vast reserves and competitive regulatory frameworks are aggressively courting the same investors that Ghana seeks. That means Ghana has no room for complacency because production declines, if not arrested quickly, can transform into long-term structural setbacks. Yet there is reason for optimism. The renewed exploration, expansion of existing fields, and the Volta Basin frontier together create a strong multi-pronged approach capable of stabilizing and potentially increasing output over the next several years. If the new wells perform as expected, and if the onshore basin reveals commercially viable reserves, Ghana could experience a revitalized petroleum sector capable of supporting its economic ambitions for decades to come. For ordinary Ghanaians, this unfolding story holds deep significance. Petroleum revenue is not abstract. It funds roads, hospitals, schools, electricity generation, and national development programs. It supports the cedi, strengthens investor confidence, and provides fiscal breathing space during economic shocks. A sustainable petroleum sector is not merely an energy issue, it is a national economic stabilizer. The collapse in production therefore mirrors more than just the decline of a natural resource. It represents a threat to national progress and financial security. This is why the government's aggressive investment strategy matters. It is not just an economic decision, it is a national defense against vulnerability and instability and stagnation. As Ghana moves forward, the world is watching, international investors assessing opportunity, local industries preparing for new jobs and contracts, communities hoping for greater benefits, and policymakers working to steer the country through an uncertain global energy transition. The $3.5 billion investment package marks the most significant intervention since oil first flowed in 2010. Whether it becomes the turning point that reverses a multi-year decline or simply delays a deeper structural challenge depends on the vigilance, discipline, and innovation that Ghana applies in the coming years. What is clear is that Ghana's energy future is being reshaped right now in real time through decisions and partnerships that carry profound long-term consequences. And for a country that once rose to become one of Africa's most promising petroleum frontiers, this moment represents more than a recovery plan. It represents a chance to reclaim a legacy and redefine what is possible for the next generation.
If today is your first time watching this channel or you are returning to this channel for the exciting content, please subscribe to the channel for more educative and developmental projects across Ghana and Africa as a whole. Do you want to know about the state of a project in Africa? Then make sure to like and comment the name of the project you would like us to talk about and its current state.